If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Everybody, good morning. Happy Monday. Hope you're doing well and staying safe in these markets, as always. Gold erupted to a new high. I just, I don't know how many days in a row I'm going to say that as the first thing I say on the live stream, but it is crazy out there. Also, let me just double check, make sure my mic is okay. Audio device. Okay. I think we're good. With that said, gold is just doing its thing at this point. Let me just switch here. Full screen. Take a look at the 4-hour time frame. I did trail my stop loss a little bit further in today. This morning, trailing it higher. And actually, I was listening to some people talk about on social media the duality of this gold move. Like, there's a lot of people who are loving it, right? If you're trailing stops, there's also a lot of people who are hating it, who are caught in short positions or dealing with really painful drawdowns. And then there's the third party, which is just frustrated by watching it from the sidelines. And look, if you tune in over the course of months of watching this stream, there's going to be a course or there's going to be a period of time where I am in that last group often, right? A lot of us are. If you're not in the gold move, it can feel really frustrating to watch the good one get away, right? Or for example, I took profits at 4,700. Super relatable. Like, you're not crazy. Like, that happens to the best of us. If you took profits at 4,700, yeah, you're kicking yourself. I think this gold move, like, I am coming from a point of very grateful to be in it right now, because I know the vast majority of people watching this gold move are frustrated by it. Let me explain. If you are somebody who's watching this gold move and you took profits too soon, you're annoyed. If you're someone who missed it completely, have not made any gains off of this gold move, you're super annoyed. If you're somebody who's short this gold move, you're in a really frustrating, dangerous spot. A lot of people are probably blowing money right now like crazy trying to short gold. I mean, that is just an everyday occurrence when it comes to gold. It's like the widowmaker for trying to short sell it. It's been the hardest thing in the world to short in the last few years. Can I ask which one you guys are? Can we have a really honest, safe space here? Are you the person that is, if you're person number one, then put one in the chat, which is one meaning you are riding the move. Like, you love this, right? If you're person number one, you are in the move, you are trailing stops, you are long gold, you are in that camp. Give me a one. If you are somebody who is short gold, give me number 2 in the chat. And if you are somebody who is frustrated watching from the sidelines, give me number 3. And if you're short gold, you are brave. And most people who are short gold will not come out and say it right now, because it's, it's like, people don't want to oust themselves. But if you're 2, like, hey, own it, do your thing. If you're 3, I think this is the majority of people, to be honest. This is what a lot of people are feeling right now, is they're feeling FOMO. They're feeling like, I took profits too soon. I should have just been trailing stop losses, right? And it can be very easy, by the way, from the third group here. Let me just give you a bit of a fair warning. If you are 3, like, if you're somebody who's watching this and you're like, next time I'm trailing stops, this is dumb. I took profits too soon, or I missed the move and I waited for a pullback. Wait a second, listen to me, okay? This is an incredibly abnormal move in gold. If you try and change everything you are doing in your trading because you missed this move, or you think you should just trail stops because clearly it works, it does work sometimes, but it doesn't work all the time. And I want to encourage you, whatever you think about, right? If you are like, I hate missing these moves, I should just be trailing stop losses, pause. There's no easy answer in trading. If you trail stop losses, get ready, because guess what? If you start trailing stop losses and in the next few months gold does this, you are going to hate trailing stop losses, and then you're going to say the opposite. So pause and listen to this. Don't change your strategy just because of what gold did this last month. Don't change it, okay? You should back test. Whatever your theory is, if you like trailing stops, great, go back test it. If you like taking one-to-one trades and moving on to the next, go back test it. But don't make your trading, don't change everything about your trading just because gold has made this move and you're pissed about it. Okay, please. I'm telling you, many traders change strategies every few weeks because they see something happen in markets and they're sort of just lagging what's happening in the markets. They're like, because in this environment, guess what? Trailing stops is king. Trailing stops is the best thing you can do. In a lot of markets, though, trailing stops are really, really frustrating. Let me give you an example. Try trailing stops in this type of market. Try trailing stops in that, and I will tell you, you will no longer want to be trailing stops, because I certainly don't like trailing stops in this environment. But hey, it's part of the process. You know, every strategy has strengths and weaknesses. That's my point. Don't overestimate or underestimate any one particular trade. Give me 1 second, guys. I have to let my cat out. He just closed the door on himself, and now he wants to go out. All right, he's good to go. Anyways, with that out of the way, I issue that warning because I know there are so many people out there who are going to let emotions of this move completely change their trading. They're going to change strategies, abandon what they're doing because clearly gold just only goes up every day. And I say that jokingly because it does not go up every day. Again, trade these types of environments and you will know no strategy works all the time. With that warning out of the way, choose to trail stops if you want to, but understand it can get really ugly and messy here too. Nothing is going to omit you from drawdowns, losing streaks, and painful periods in your trading. What's going to keep you in the game is accepting the strategy that you choose after backtesting it thoroughly and embracing its pros and its cons. Okay. With that said, S&P 500, nice little bounce back here. We had some uncertainty over the weekend, you know, some flare-ups in the geopolitical drama space, of course, that is helping to bolster gold here, which has become easily my best trade of my career. I'm just continuing to trail a stop on this one. If we take a look at the 4-hour time frame on gold, I have chosen to trail my stop loss further. We broke through this high, retested that general area, shot off that area. I would like to see, if we come back into this range, I'd like to see buyers hold. If we don't hold there, trade's over. We cut it. I've been in this trade since December 31st, 2025, and just trailing stops. It's almost been a full month that I've been in this position, and the trade is up a really nice amount of money. And my plan is just to stay calm and trail stops. So let me also share with you guys just a little bit of the update that I shared with members. This trade's up a nasty amount of money, $117,000. And I don't say this to brag, because I have a video that I filmed this morning talking about the full context behind this move for me, because I just got done rambling right there about how trailing stops, they work when they work and they don't work all the time. I was down $70,000 November and December. So take that into context when I show you that I am up, I think 115 now or so on this trade, 114.9. The trade's up a nasty amount of money. But in November and December, I was down $70,000. Okay. So context is important. I think it's only fair that if I'm going to show you that winner, I also show you the ups and downs. I have a video coming out about that maybe today or maybe in the next few days. I filmed it this morning. Anyways, I have to be also completely transparent. Emotionally, that is a ton of money. This has become a very large position for me, and I'm doing my best to stay as rational as possible with this trade. Market structure will guide me out of the trade when it's time. The only thing I can do with this gold trade, okay, the only thing I can do is to stay with the strategy that got me here in the first place. The strategy is the M&M strategy, macro and momentum, both hand in hand, yin and yang. Macro, of course, looking at things like the Edge Finder to help decipher jobs market statistics, inflation statistics, geopolitics, economic growth. And then, of course, momentum in price action will keep me in the trade. Although I do admittedly feel some emotion about this trade, like this trade is a very large number. My actual actions from there are to trail stops according to my rules and to let the market do what it wants to do. Okay? Because I don't know how far it's going to go. Gold could explode to 5,250 an ounce. Clearly, nobody thought gold was going to go to 5,000 in January. Unbelievable move. So incredibly rare for gold to make this types of moves. These are way out of normal proportion moves for gold to make in such quick succession. And so it's incredibly rare for me to have these types of trades. I don't make $100,000 trades ever in my trade. I've never had a six-figure trade in my life. And transparently, it's a lot. It's like, okay, that's a scary number. But I have to accept the only thing I'm going to do is stick to my strategy. I'm going to stick to my rules. Trail stops. Whatever happens, happens. That's it. Right? So I'm going to go through this as publicly as I can, because that's what I do on YouTube. I share the ups and downs of my strategy. And you know what? I promise you guys, here's my promise, and then we're going to move on to other things. I promise you that when I'm down $200,000, I'm going to talk about it on YouTube too. Okay? Because guess what? I'm up a lot of money right now in gold, but there will be a time, I promise, where I'm down $250,000 in my account, and I'm going to talk about it, because that's what comes with the strategy. You don't have big gains I have a large capital basis that I'm trading with. With big gains also comes bad drawdowns too. So I promise you, when I have that downside, I will also show it to you, and I won't shy away from, talking about my losers too. I've just been in a really good win streak, and hey, maybe it'll continue. Anyways, S&P 500 technical support seemingly being found here. If we take a look at the overall moving averages here, we are back above the 20-day moving average. We did retest the 50, didn't quite get to the 100-day moving average. Longer term momentum still seems in favor of the bulls when it comes to S&P, though I just don't love, I still feel pretty cautious on stocks at this time. And if we take a look at Edge Finder reading for S&P 500, the neutral reading here is just +0. So Edge Finder score is +0. Technical score is softly positive, although we have sort of flipped into more of a 4-hour daily chart bearish / neutral reading, although the month of January is historically seasonally bullish. Okay, let's see. COT and sentiment data showing a +1 score. So institutions did do some shopping, it seems like, on the S&P, buying S&P. However, the net positioning overall is pretty mixed. In fact, it leans kind of bearish, it seems like, from institutional positioning on the S&P 500 futures contracts, the non-commercial, that is. Fundamental score, -2. Inflation still a little bit sticky here. We had PPI come in higher than expected. And this is also where I'm like, okay, when we look at gold's only getting a +2 right now on Edge Finder. So do I just sell gold because of this? No. I stick to the rules that got me into this trade. With gold, Edge Finder's getting a +2. Fundamentals have flipped a little bit more pessimistic. Rising 2-year yield and 10-year yield, as well as steeper inflation readings recently, are putting some pressure on the Edge Finder's scoring for gold specifically. And so we're just at neutral. Neutral doesn't mean I sell, doesn't mean I buy. It means I manage the position that I'm in. Now, if we flip into a very bearish reading within Edge Finder for gold, then I'm going to get real tight with my stop loss. But right now, neutral, I'm going to just stay with where I'm at. and just continue to follow price with it. Nick, can you take a look at the Nikkei? Of course. Yes, I can. I'm still in my Nikkei trade. It did give back a substantial amount of the profits here. Pretty quick too, with some of the yen stuff that took place. I do want to talk about that. And so my thought with the Nikkei is we have come back and retested this prior all-time high support. I did buy over here, and I don't know what the Edge Finder is currently reading on Nikkei. Let's take a look. Nikkei's got a +9. Very strong reading. And look at that, even accelerating in score here recently. Edge Finder score coming in real strong for the Nikkei. Institutional activity is very bullish. Crowd sentiment actually getting pessimistic. 4-hour daily chart trend to the upside. Current month seasonality, the month of January looks strong. Seasonally, inflation looks bullish. Yeah, I mean, economic growth also a little bit bearish. That's not as good. But overall, a nice positive score here for the Nikkei. So I like the trade. And what I will do with it is I'm long with a stop loss below this little low here that we had. So if we come back into play and completely flop and fail there, then I take a small loss and I move on to the next trade. If it starts to break back to new highs, we did reject prior all-time highs. Doesn't necessarily mean that we are bearish from there, but for now, price is consolidating. I would like to see this thing take out those highs. If we can take out those highs, then I will be looking for any opportunity to take this stop loss and to trail it further into profit, locking something in, or trail it into profit for the first time. I am still floating risk on this position, and if we crash lower on the Nikkei, I'll take a small loss and move on to the next one. Just quick look at the Chinese stock market. Breaks through the all-time highs. I do believe we're getting, we were getting a stronger reading. Now Chinese stocks getting a +3 score. I'll keep an eye on that one if we do get the technical breakout. NASDAQ's getting a -2 here, so not bullish or bearish, just sort of in neutral territory. Russell, however, continues to get a +5 score. The Russell is one that I am currently long, though fundamentals for stocks here just recently for me are just a little not as great. This week, however, you do have some really big stuff for U.S. stocks. You have a lot of earnings reports and the Fed meeting, of course, that could all move, markets pretty dramatically. If we take a look at the Russell, I have got my stop loss just below structure here. We did get a nice, at least so far today, a nice response here at this level of support, this 26.25 level. If we can continue to push through all-time highs, if we break through there, I'm looking for an opportunity to further lock in more profit on this existing position. The Russell trade has also been simultaneously a really good winner for me, although pales in comparison to that gold trade, which is obviously the big one. Anyways, let's see. What else do we have? Dollar index here continuing to move lower. And watch this, guys, because this softness in the dollar index is a very interesting story that's kind of unfolding. It's not like we had some sort of CPI print or NFP print that took place. There seems to have been a little bit of yen buying or some activity here in the last few days. Look at dollar yen, right? Dollar yen coming down hard as yen strength kind of stepping in here. Let's keep an eye on this. Let's take a look at the JXY. That's the Japanese yen currency index. Gapping up here today, 1.13%. You have got a pretty sharp move higher in the Japanese yen. Of course, this is, I just want to take a look here. If we can go to our COT data and look at the Japanese yen, I'm just curious. Yeah, institutions are still very short the Japanese yen, which has been a phenomenal trade for them. I mean, look at this activity. What we're looking at, by the way, is we're looking at the COT data, non-commercials. So we're looking at institutions, hedge funds, banks, etc. Their positioning in the Japanese yen has been considerably more bearish over time. This yellow line shows their overall long position. And so you can see it's gone from a very bullish position on the Japanese yen as of like May of last year. They have steadily, look at this line, it's steadily decreased over time in long position and is now just at 41% of positioning is long. That is a majority of institutions being bearish the Japanese yen. Has that been the right play? 110% it's been the right play. Look at the bearish Japanese yen play that has gone on since May, and you will maybe not be surprised to see institutions started getting short the Japanese yen right around here. Now remember, dollar yen is short yen, long dollar. that was the perfect play. So institutions played this like a fiddle. And if you take a look at other pairs, they played it even better here, right? May of 2025 into now, being short the Japanese yen has been a wonderful play. And so I do want to keep a close eye on what takes place in coming weeks within the commitment of traders report. Are we going to start to see institutions unwind their short positions, start to get long? Or are they going to take this rally in yen as an opportunity to get back in and, essentially pig pile on the shorts again? That's the question for us to look at. Open the stock box. I'm going to not look at the stock box right now. We're doing currencies, commodities, and indices. At some point, I will also look at stocks. So with that said, if we're taking a look at the Japanese 10-year yield, this still remains elevated, trending up. 2-year yield is actually up today, while the longer end is down today. Kind of an interesting thing to look at. But overall, if we're looking at yen pairs, I do have to kind of look at this as innocent till proven guilty. Now, I don't necessarily love dollar yen. In fact, dollar yen, let me just pull up yen readings here within EdgeFinder. Like dollar yen's actually getting a bearish reading. But when we look at things like Kiwi yen, Aussie yen, pound yen, these dips in these pairs may actually, in my personal opinion, not financial advice, they might be buying opportunities. Of course, with a stop to kind of control that downside. But if I'm looking at specifically NZD/JPY, if these things continue to pull back, Kiwi yen, I have eyes on like this 90.2 level. You get a pullback into this area. I do like the idea of potentially going long against the Japanese yen here on a discounted pullback here. So I like that. Pound yen, kind of an interesting one at current levels. In fact, this may actually be a small trade for me with stops below structure in case I'm wrong about this idea. But I do actually like pound yen getting a +6 reading. And let's also look at AUD/JPY. Where's that one at? AUD/JPY here as well. Probably around this, as I talked about in my Sunday video, probably looking at like 105.25 or so. So I do like the idea of potentially stepping in to short the yen. I'm still very much on the bear camp of Japanese yen. I think we also just covered that institutions, at least for now, seem to continue to be on the short side of the Japanese yen. And so I'd have to be convinced to change my mind on this. If you start to see institutions start to ratchet up long positions on yen, then it's a different story. But my opinion on it is right now, I think that if you're looking at, EdgeFinder's top setups page, which is looking at economic growth, inflation, jobs, sentiment, technicals, etc., I generally like the upside for some of these currency pairs, barring dollar yen. Dollar yen, I would say, still, I'm pretty hesitant on that one. And I would not be surprised. I mean, watch how this candle closes. If you're watching yen pairs today, watch how this candle closes. That is an ugly potential close. If you get a close like this, closed beneath this key area of support, the dollar index was in free fall on Friday. We'll see if it does continue to have follow through to the downside. When I'm taking a look at the dollar, let's just see if we can take a look at this. So if I look at US dollar currency pairs here, I'm getting Kiwi dollar, pound dollar, and euro dollar, and Aussie dollar. We are getting a very bearish report here on the dollar itself. Although neutral at the DXY level, we do have some specific currency pairs that are looking a little bit stronger against the US dollar. So if I take a look at Kiwi dollar and pound dollar, these are two getting probably the strongest reading across the dollar pairs. Pound dollar here, let's pull this one up here. Just broke through a major level here, this prior high, fresh highs going back to October. So if I'm looking at the currency world, I am looking at possible pullbacks into this area here for possible long side continuation plays on the British pound against the US dollar. I do like that play. And actually, we can mark this up. I'm going to clean this up and just bring my support level and mark it right there at prior highs. So if I'm zooming in a little bit to price action here on the British pound against the US dollar, that's probably a 50% retracement. 38.2 to 50% retracement starts to look attractive for pullback buys, at least for now. Of course, it depends what EdgeFinder is reading at that time. If you do get that pullback, let's say it's 5 days from now, you're pulling back into this area, I'll take a look at EdgeFinder at the time to see if I still like the setup. Overall, we also have Kiwi dollar. If we take a look at NZD USD, see what we've got. Beautiful breakout here, NZD USD. Now, I also want to show you guys something that I've been working on over the weekend, which is, if we go under macro screeners, we can take a look at the economic surprise index. And some of you guys may have already seen this. In fact, I saw some people in the Discord chatting about this already. So this was previously, this is not necessarily completely new to Edgefinder, but we added some new currencies in here. And what you are looking at is essentially a economic surprise index. Now, what is an economic surprise index? Well, the economic surprise index scores from 0 to 100%. It measures the momentum of economic data relative to market expectations. It tracks the percentage of recent economic releases such as GDP, employment statistics, and inflation that have outperformed consensus forecasts. So if you have a high score, it indicates a consistent trend of data beating expectations for the currency. If you have a low score, it indicates that the data is frequently missing forecasts, which can signal economic cooling and may lead to a more dovish or weaker currency. So what we can see here, based on this, I also implemented this because I think it's important to indicate it is a short-term fundamental indicator. It's not a long-term indication of where a currency is going, okay? But it's short term, which is excellent for traders, both in the day trading and swing trading side of things. So what that would tell you is that in terms of economic data releases, we are seeing some stronger readings here for this far right-hand corner. You can see NZD, Euro, Aussie, and the British pound, the Japanese yen, and the Chinese yuan. So when we look at that, we also see US dollar is kind of middle of the pack, and the lowest being like Swiss franc, Turkish lira, South African rand, and CAD. So with that in mind, however, let me show you a second component to something we just added. This is the economic surprise index. Now I will also show you the economic strength index. What is the difference? This is a longer term fundamental ranking indicator based on the latest available data for the underlying currencies. In this case, we are not comparing actual versus forecast. We are just looking at actual data. And you would be surprised the number of macro nerds like me that have wanted a tool like this for a while. I'm speaking, of course, about Marco, who comes on the live streams almost every day. He and I have kind of collabed on this specific tool to build a longer term fundamental ranking. So instead of looking at actual versus forecast data, this new strength index looks solely at actual data or the latest available data. Now, if you want to pause, again, you can go through this on your own. I need to fix the coding here so it doesn't overlap with some of the things. I'll fix that after stream. But basically, it looks at the GDP growth, unemployment rate, interest rates, and CPI, as well as real yield for currencies to determine over the longer stretch, think 3, 6, and 12 months out, where these currencies could potentially be headed next. Now, of course, nothing is for certain and things change, but this is a longer term fundamental ranking indicator, which actually puts some strength potentially on the US dollar, which of course has much stronger growth than other places, low unemployment rate, interest rates that are pretty attractive, and inflation that, relatively speaking, produces the highest real yield of the major currencies. What is real yield? Interest rate minus inflation. It's what you actually get investing in like US bonds after taking into account inflation. Anyways, I just wanted to share that. We also have added a historical chart here on the bottom, which gives you an idea of how over time these strength scores have been producing. So we can, for example, with more time as this populates, we'll be able to look at how the US dollar is strengthening or weakening. So it scores, it's relative to its own GDP. Check this out. And if you're a nerd, if you get this stuff, then you're going to love this. The score is relative strength based. Okay. What does that mean? The score of each component, GDP, unemployment rate, interest rates, is compared to the rest of the major currencies. So GDP growth is getting a very high score for the US because when we look at it relative to the other major currencies, US GDP growth is monstrously bigger, right? So it gives a stronger score to that higher GDP growth. So if you are a macro nerd like myself, you may really like these new tools that we've just implemented. I spent a good chunk of the weekend on them. So if you have Edgefinder, give me some feedback. I'd love to hear from you on which things you like or which things you change. But economic surprise index, probably better for shorter term traders. economic strength index, probably better for position traders and longer term swing traders. So take it as you will, but I did want to just kind of give a little bit of a shout out to those new tools that we've been working on here behind the scenes. So yeah. Anyways, what we have here overall today is we have stocks rebounding pretty surprisingly well, by the way. Some of the over the weekend concerns around, Trump flaring things back up with Canada and upset about, the Chinese agreements and stuff like that. It does get the market kind of worked up. And we did see a gap down in the stock market that has been very quickly bought up here. Perhaps maybe investors, traders alike, kind of catching on to the antics of Trump finally. I mean, it's shocking to me how many times we have seen the market. Trump says something, freaks everybody out, everybody sells, and then it walks back, or Trump finds sort of like at this point, I'm kind of surprised that the market still gets played the same book over and over and falls for it every time. Like the taco trade is real. And, it's not necessarily, making fun of pro or against Trump or whatever. It's just literally how he negotiates, whether you like or dislike what he's doing, put that to the side for a second. It's just what Trump does, right? Trump, when he's negotiating, in his mind, the way to do it is to, throw a punch first and then offer a resolution after. And, if you just take that with a grain of salt, the first thing he says, maybe one of the easiest ways to think about it is like, ignore the first tweet, right? Look for the second tweet. And so anyways, stock market just opened up here. US stock market, at least on the 5-minute candle, 30-minute candle, looking strong. Gold is also at least pushing off of its intraday lows. We'll see if it holds. Bitcoin continues to stay under pressure, and we will see where things go today. I've got a video coming out discussing this gold trade in more detail. I mentioned that I filmed that this morning, so hopefully you guys enjoy that. Up next, we have Ivan, who's going to take over the stream and talk a little bit more about Forex pairs, markets that are moving today, and setups that he is watching. Before I throw that over, if you guys want to access, if you want to try out the Edge Finder, or if you want discounts on it, I'll leave a link in the description or in the chat box here for you. We'll have the producer drop it if he so pleases, to share a way for you guys to send a direct message to our support team if you want to get access to the Edge Finder, if you want to try it out for 30 days, or you can apply for it with we have a 30-day trial that is an option as well. So send us a direct message if you want access to the Edge Finder. Don't miss out on such great tools. If you're trying to become a better macro trader, having stuff like this in front of you can be an absolute game changer. With that said, real quick break, and then up next, we have Ivan FX. Stay tuned. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
This is one of those moments where you think to yourself, why didn't I think about that before? Now I heard Nick talk about issues or wide issue coming in forward. I haven't heard him, but I might be wrong. But I also didn't hear you say that I've seen some threats coming in and saying, or some comments coming and saying that, well, there is going to be a budget bill coming in February, that the Democrats won't help out or agree with that one. So we might head into another government shutdown. So Cycling Club, yeah, great ride. So that means even more dollar bearishness for that matter. But it's another part of the about the risk. And we had a planning meeting yesterday, and I agree with myself. I was quite filled with risk. I didn't see, well, I mean, I can see why the reason market would go in a certain direction. Now we gapped lower. Fantastic, great going forward. But we have moved quite some pips. Dollar yen has moved about 500 or so pips. I also saw from Friday that we might have some yen intervention more than this already. So I'm like, okay, let's leave the dollar yen alone then. And dollar yen or yen pairs has generally moved, slightly lower, continuing to this session. But it's very clear to me, and I was like, well, but if it makes a higher high, great. And it didn't. To me, the risk scenario, we had a risk meeting about a risk a few minutes ago, and to me, the risk is very, very presumably elevated and feels elevated. Now, that's not the same thing as what will the market do? Will the market also feel? Will the market also then feel like, okay, it's a lot of volatility, and we did gap up higher ever so slightly, but way more about it last week, but nevertheless slightly higher on the VIX. That doesn't change that S&P 500 is definitely going higher. And that's just a part of trading. That's just a part of the game. That's just a part of what we are supposed to account for. So, in the world where Ivan yesterday said, what if yen pairs turns around and we can buy it again? What about the euro dollar trade you did take, Ivan? And I, quite frankly, have not posted that it hit stop loss. Should have on Friday, but there it is me. I was wrong. Hands up on that one. Cool, fair enough. That's what we tried to do. And I wouldn't say that I failed miserably, but I miscalculated or underweighted the risk that was in the market in terms of the move away from dollar and the weakness in dollar and the power that it had. So I'll take that with me into the next trade. And there's nothing more than that. It turns my January month red. I don't like it. I don't want to be wrong. But at the end of the day, did I do well? I could have waited for here, for that sell, but I probably would have. Probably would have anyways, because my fundamental belief was what it was. My risk belief was what it was. My seasonality was what it was. My process was as far as I understand, as normal, but I was just wrong about the short term. So I take it as business cost, and then I'll leave it alone. So the question is dollar yen going back up to 160, or is it going to go down to 138? I am of the belief that if it's yen only, that we're going to go back to 160. Well, I bought the previous week, sir. I bought a euro dollar. I bought euro. Excuse me, where was it? Where is my euro dollar trade? Where is it? Here it is. So that would be, here it is. 18th. I bought it on that candle pullback on that. That is not the blue one there. And I took profit at 117. And that 117 was the weekly target. So to me, standard practice, bullish trend. So yeah, and it was according to my rules and what I looked for to do about January 1st. January to me were sell euro first week, second week, buy the third week, sell the fourth week. So that was my plan. Followed it. Didn't work out for one of the weeks. Okay, fair enough. I'll take it. No, I'm not. No, as you can see here, this is my trades. No, not really. Because I didn't believe, or still probably don't believe, that the dollar weakness at the moment is short-term volatility. It still doesn't cover the fact that we are not gonna cut interest rates anytime soon. We are seeing GDP coming in quite high. We are seeing CPI, PPI still remains elevated. So to me, the U.S. economy, as of general, isn't weak at all. General, it's a 4.4 GDP. Services PMI coming in for 54.4. CPI still 2.7. PCE 2.8. Still, nothing fantastic, nothing horribly wrong or elevated, but still it is what it is. And then wage growth coming in 3.8. And the weakness is, of course, in the non-farm, but at the same time you also have improvement in the unemployment rate. So to me, fundamentally, generally speaking, as you can see even now, the general fundamental impact is dollar strength. And then I was wrong about the short-term volatility in terms of that people are now shorting dollar or selling dollar because they are exiting, seemingly going into Europe instead. That markets are now starting to distrust the reliability of the US. And cool. But and for that matter, whatever the reason is, I'm not reasoning it out anyway. Right? It is what it is. It is can't. No, I didn't hold it. But it's okay. I win some and I lose some, and then next week, and then the other week, and then it's okay. I work a lot with myself to be still happy when I'm still losing, even though I don't hate. I strongly dislike hitting stop loss because I want to win as well. But I've been a part of these moves previously with when I've been a part of it, and then what do? You win some and lose some. So my story about dollar yen. For dollar yen, we also had on Friday, and allegedly, the Fed New York, the Federal Reserve of New York went around to banks and asked about their yen position, or their standing on yen, which is the foreground of the process before coordinated yen intervention. And then dollar yen fell from 158.50 to about 155 8 and then continued falling a bit more. So to me, it's more of a rebalance, take profit, get in at a get it in a better price. I don't think I don't believe that this dollar weakness. I can be wrong, and you can laugh at me in a month's time, but I don't think that this dollar move is sustainable over time. And I've seen Nick also saying dollar weak, dollar short short term, and then dollar long term. I still support that idea. And cool. So to me, it's what leads the process to where how do you lead the kettle to water, right? What do you do in a storm? How do you use your map? How do you read your map? How do you read your surroundings? It's and if you watch those TV shows where they use maps and nothing else and just maps, they all take different trails at the end of the day, but they still end up at the same place. So but yeah, so Aussie is higher, and this is kind of like the same story as of gold and silver. What do you do with a currency that is elevated? Do you jump in now and say, "Hey, I'm gonna take the high," and it's been high. We've been high now for was it 6 days or something? We've been high, but we're nowhere near all time high. We're just the high of 2024, but we're not back to 2020 levels. So the question then is, when are you gonna get the pullback? And that's where you need to be ready. Today or now, it's all gone. It's elevated. It's gone. There's nothing I can do because and there's almost my luck. If I try to buy something, it's generally the peak. So it just keeps being the peak. Then cool, doesn't matter to me. I don't have competitive advantage there. I don't have money to give to the market. I don't want to give money to the market. I can rather give it to charity if that's the case. So to me, dollar falling, cool, great, fantastic. You do you. You have a great time. You enjoy that time, and while I figure something else out at the beginning. Um, and I think I also said earlier, like I would like to earlier, but probably yesterday, I would love New Zealand dollar to buy New Zealand dollar, but I need quite a deep pullback so that I don't buy the high, so that I can get back in again. And that's not what the market has provided. Okay, now the question is for fundamentals. Uh, for New Zealand and for Aussie, which are quite strong at the moment, given that they have higher inflation, they're likely to hike this year. Okay, that's the bottom line of it. How do you get in? Is again what can make or break it, and I'm not interested in breaking, so I'll do it. Same thing for this Swiss trade I had. Something in this direction. I had a comment from one of my good friends. I mean, you were a bit high on the entry. I can agree. I could have waited a bit 20 pips or so to get a better entry, but it would have still given me whatever the loss was because it doesn't matter. When you're wrong. And this is the power of stop loss. For me, I don't want to be tapped out and then go back into the direction. I need to be wrong. And that's when I get out. So I just, from my stop loss and trying to find the positivity in this trade, is that I'd avoid it being, another 100 pips stop loss, 100 pips in loss. Because I'm trying to avoid, if I'm buying, I can buy here. Fair enough, I can buy here. But I don't want to be tapped out like a small, just a small little tap. For example, here selling. If I sold here, not that I did that. I don't think I did that. No. And then I just put it above the previous high. Everyone can see that. It goes a bit in, and then it goes in the other direction. That's the primary goal of where I put my stop loss. But yeah. Yeah, I mean, we won the other week. Like, why are we gonna be bothered about this one then? And then you can say, well, cycling club 55 and people were buying. I didn't, well, did Marco also buy it or something? I think I saw something that he was also in a trade there. And to me, cool, great. Uh, but at the end of the day, it didn't, I only realized until later that they ran it. And then that's that. There's nobody, none of this is bothering me that other people are taking the trade. I guess we can all sit in the same club and cry, but at the end of the day, what's that going to do with it? What that can help with our trading? And what I'm also trying to portray here for me, what's important for me is to get rid of all negative thinking as fast as possible, even if it takes a week, so that I can get back to being in a positive mindset and in an opportunistic mindset, because I have previously history of digging myself into a ground, and you're not going to find trades. You're not going to do it better. You're just going to be miserable. Am I going to be miserable trading? Am I going to be miserable trading dollar yen or dollar Swiss or your dollar? No, I'm going to be happy. I'm going to be positive. I'm going to be, I'm going to be opportunistic, and I'm going to find my competitive advantage. And right now, it is not there. What do you think the market accepting these lower price in dollar Swiss is temporary? So I don't think that dollar Swiss prices are exceptionally low. But the question you're asking that I'm going to give the answer to is, does the Swiss National Bank like these low prices? And because they don't. This is their level of where they generally tend to intervene. Cosmic Pulses, how are you, Evan? Oh, I'm great. I will be even better. I will be even better if somebody goes and asks the support team and books a one-to-one meeting with me so that I can talk to somebody and we can go through your trades and I can make you a better trader. Then I'll be happy. When you owe countries money, the last thing you want to do is to make them angry. Yeah, true. So that's kind of what has happened in this case. But back to my dollar Swiss, this is the place that a Swiss central bank tend to be around. So if you want to book a call with me, there is the link. It's free. And it's a lot of value. And I just had one earlier today, and he said it was fantastic. So why wouldn't you? Thank you. He's certainly in a country that that dared to use something else other than dollar. I got absolutely elaborated and replaced the entire government. Yeah, yeah. I don't know if we're going to talk about Zimbabwe today, but yeah, that's a different case. That's a different thing. So dollar Swiss to me, yes, it has dollar weakened. I don't think that the Swiss National Bank necessarily like it to be this low. Therefore, I might be, what do you call it? I might be inclined, or I would imagine this one to go higher. Now, we have FOMC on Wednesday, right? To me, that's a dollar bullish event. So this dollar weakness right now is just people repositioning. It happens, it comes, it goes. And I'm not going to say we're going to be back to dollar bullishness, but what I'm saying is what is happening is dependent on how much people are valuing or devaluing the dollar for their protection of their own policy, for protection of their own portfolio. And I don't know that value. I don't know how people individually or funds are individually going to reposition themselves. It could be a crash, or it could be just a downturn, and then it turns into a strong trend again, going opposite again. So it's, at the end of the day, for me, it's where is your opportunity? How is your opportunity presented? And do you have competitive advantage? It's plain and simple. If I was selling dollar Swiss last week, just say that I did opposite of what I'm thinking right now. I would probably be out now anyways. So that's the target for the month. So like even though I were to have sold, I would be right. I would be out of the market now. And what happens beyond current target is beyond my hands and beliefs, because if you see across history, we generally tend to take profit at these levels. So um, I definitely cannot short it because that is definitely way too late. So I should have sold when I bought. So there's that. So setups, right? I am on the yen trades, on the yen situations. Take away this one, sorry. But it's very still to me very hypothetical. It's still very aggressive. It's still very, if we do that, I'll do it. So it's going to be a risk because again, this can continue falling. This doesn't need to stop here. There's nothing here, and we are kind of a new lower low. So to me, I would like it. I would love it to just have a patience. Just let it be. Let it be February, and then we can make a reversal. I'm not here to chase. And I think that if you go back to my if you go back to my if you go back to my type of setup, I really wanted to have a quite a long bearish trend, have a reversal, and then turn around. And that turnaround takes a day or so. So if now we are going to be aggressively higher, then it probably will be without me, because I don't chase bearish trends, and especially if they are interventions or just take profits, because the question is, are we going to continue? And again, that is outside of my control. The only control I can do is when we go bullish again. When we go bullish again, is this enough? No, it's just a dust in the ocean. And then I might not necessarily change, but if it's looks better tomorrow, then cool. Then that's cool. And normally I have my entries on Euro London Open on Tuesdays. So there is a lot to happen. So for me, it's just gonna continue lower, but I'm optimistically, patiently waiting Euro, patiently waiting, and Aussie yen. Sorry, New Zealand yen. Patiently waiting for it to return higher. I was thinking about Aussie Swissy, New Zealand Swissy. I should have been down here, but then that's taking a sharp knife. I don't buy those things anymore, because what if it just continues? So that's just funny games. Um, so because if that would be that this Euro Swiss would have intervention, if this one starts to rise, then the other ones should also. So in right now as it sits, Aussie yen, Euro yen, New Zealand yen, pound yen, only if it turns around, no more volatility, everything is great, everything is back to normal. And then let dollar, let gold, let oil, let silver for me just be what it is. It doesn't move or chase me. It doesn't tickle me. It doesn't stay oversold forever, and it doesn't stay overbought forever. So maybe gold does, maybe silver does, but to me, it doesn't really matter. Because we're gonna have Bank of Canada, FOMC. We're gonna have a lot of things happening going forward, and there's a lot of things that could change. Taco. So yeah, it's okay. It's okay that it doesn't catch bids. It's absolutely perfectly okay. Give me a better price then. I love it. I love it to sell a high price if that's going to be the case. Sorry. So to me, I think this is great. At the end of the day, I think this is great. I think this is also great. And I think this is also great. Could have been better price, could have been less rangy, could have been less whatever it is, and then it makes a new higher high, and then we take the pullback, and then great. I don't like ranges. That's why I'm like a bit iffy about it. Okay. Auction theory is important. Game theory is important. This is game theory. What do you do when the opponent does one move? When it sends the market lower, it sends the market higher, quite elevated. Do you then jump in and be like, hey, I'm gonna be the one stopping the bus here? I'm not the person. So for me, Aussie yen, Euro yen, New Zealand yen. Hopefully tomorrow gives me less thing to grieve about. And until then, boom. I'll see you in the next meeting.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Let me go ahead and share my screen here. I forgot to do that. Awesome. Hope everyone is well. Going off here, starting off with what's going on as far as for my trading go. Took 2 L's, dollar Swiss, the buy position that I had and Marco and myself had here, and pound dollar short. So those were some L's here that I just took. So now I get the opportunity to go ahead and see what we can go ahead and do moving forward. We had a conversation, a very short-lived conversation. Basically, a new update came out on Discord, which is this here. And basically, well, the dilemma that I'm facing is that you're getting some dollar strength or dollar weakness here in the very short term. But then you look at some other, metrics here, like the equal strength index, which is like the real yield heat map. And that was showing dollar bullishness at the very top for the long-term picture. So that's the current dilemma that I'm facing at the moment as far as navigating that. But this is really cool, right? This new feature, and I'm gonna try to use this here to backtest. At the moment, the tool just came out here, so there's no not a lot of history to reference here. But you can actually see here that in green here, the pound dollar when I was short was actually very, very weak, and then we had this crazy jump higher. And then the pound actually became the strongest link, right, out of the basket here that we're looking at. And then obviously pound dollar accelerated, right? So really interesting to see that, and I'm going to be playing off of that. So you'll see more of this screen. I really like the idea of being able to see the history and see how the changes in the strength really kind of translates to the price action. But yeah, that's the dilemma I'm facing at the moment. The thing is, we have some real headwinds for the dollar, right? The actual fundamentals behind it doesn't seem too bad. So if we just pull up the economic heat map here for the US, what's good, Alan? What's good? Hello, beautiful people. Hope everyone's staying warm out there. But if you look at the heat map for the US dollar, it's not the worst, right? You see the dollar impact here on the very right, 63%, good right here. The score is not bad, right? So what's really driving the dollar weakness is just a lot of headlines and basically a risk premium, right? So people are starting to shift out of the US, going into other assets here. You have the possible Fed chair coming in very, very soon. That's going to be most likely a dove. But on top of that, you have the Fed independence being questioned, right? That's a very big thing. You have a lot of safe haven demand because of the geopolitical tensions that we're seeing around. That's very, very real. You can see that the dollar yen and the dollar Swiss, the two benefiting. And then you also have gold as well. So many things happening with the dollar. There's another one that's at the top of my head here, but I can't remember it. But Nonetheless, there's a lot of things happening going against the dollar. So short term, it seems like the dollar is going to continue heading downward. Now, what usually happens is headlines are very short lived, and whenever that pressure or those things are resolved, you get a very quick snap back in the opposite direction. In this case, the dollar, when you look at the actual fundamentals, the macro picture, the dollar doesn't look weak that much. So if you do get some kind of a relief in the headlines, things get resolved, then you will get some quick, pricing of back into the dollar. But that's speculation, right? Nonetheless, that's speculation, and you don't want to just bet on that. So at the moment here, the dollar is looking quite weak. If we go ahead and look at our tools here, let's go look at the top setups page. You got New Zealand dollar at the top, pound dollar at the top, dollar CAD, dollar yen here. Dollar Swiss is getting somewhat of a neutral reading. It's basically one tick away from being a bullish reading. And the Swiss basket actually in itself is getting weak. So most of the Swiss pairs are pretty good. Like the Swiss basket is really weak at the moment. So interesting to see the dollar Swiss take a big dive here. So essentially, I'll sum up what I'm thinking here. I'm looking to go ahead and go short the dollar, but if we look at the price action, I'm going to go across every single major currency. Aussie dollar, super high up there. Euro dollar, super high up there. Pound dollar, super high up there. I had this thing, blew right past it. I'm just trying to get a feel for what's going on here. New Zealand dollar, super up there. And then obviously, if you go ahead and look at, dollars, pairs down, down, down. So I don't like the idea of buying at these highs. Previously, I said the same thing here with the Aussie dollar. I was like, I'm not going to buy into this level of resistance or what could be a level of resistance. And then, surely enough, I'm wrong and we just blow right past through it. However, I'm going to stick with that feeling. I'm going to wait for a pullback. That's the better approach. We are at this, these 2024 highs here. So maybe this is a level of resistance. Remember, we popped into here and then we really faded back down. Not saying that we're going to fade all the way back down to here, because I don't think that's the case. I think fundamentally you still have the RBA looking to hike and the Fed looking to ease. So maybe not all the way down here, but I'm going to wait for a pullback if I want to participate. It sucks because before I wanted to wait for that deeper pullback, which was over here, the 6,600 level. I didn't get it, and this thing just ran up right above me, right? Like this was another level of support that I was going to consider, but ultimately I wanted a deeper pullback. And look at that, 265 pips, right? So if I'm thinking of this, and I was listening to Ivan's segment here, and it's very good what he said, but put yourself in the seat of someone that's in this position, right? If you're in Aussie dollar long, or if you're in dollar Swiss short, right? You're most likely taking profits, right? So, or considering taking profits at least. So I'm gonna be patient here at this level and wait for some kind of a pullback here. So it sucks because I missed it, but I think that's the smarter thing to do. And then if you get some kind of the headlines being resolved, then you'll definitely go ahead and see kind of a whipsaw back here. And then maybe this level of resistance that I thought was going to hold just becomes support, right? We held it that one time, we bounced off, and then we shot right through it. So maybe if we land back here, it's a good support level. And this is also the 61.8% retracement level. So that's kind of what I'm looking at for the Aussie dollar. Aussie dollar is still my favorite one. New Zealand dollar is getting a higher bullish reading on the edge finder here. If I put the fib from this recent leg up here, I would like to participate here at the 50 and the 61.8. This is a really thick level here, so something I'm going to consider as well here. And then the target, if I end up getting into this position, would be something like so. Something like so. I think it's pretty reasonable here. But this can very well just continue chugging higher, 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 and I get no opportunity to entry, and I'm just sitting on my hands for most of it. Yeah, AUD has been a monster. Nikkei is a good trade. How's the storm treating me? It wasn't too bad. We were in the single digits. Yeah, Aussie dollars long is a play of the year. I was calling it too going into the year. However, I was pretty conservative. Like I wanted to get that deeper pullback, but it's okay. We might get a hawkish Powell. Ah, yes, Othman, you just reminded me. The other layer of what could happen here, it's not necessarily about Powell. However, you have a something coming up due a balance come by Friday, and there's a possibility. I think Poly Market is pricing in a 70% chance that we get another government shutdown. And so that's obviously not good for the dollar, right? That's going to be some added pressure for it. So that could also be some added fuel to get these currencies up here. You know, if you get a sell off into the dollar, you're going to get New Zealand dollar trade higher, Aussie dollar trade higher. There's going to be some real momentum behind these pairs. And so that's kind of what's, you know, on the back of my mind as far as like current price action and whatnot. So yeah, it kind of sucks, right? I'm kind of just like took two good L's, and I'm just waiting for some trades to line up here for. So uh but yeah, dollar yen. I'll go ahead and touch on this one a little bit here. I did hear recently on the Telegram channel, so there wasn't a intervention per se. So the flow data didn't show anything about intervention. So this is more of a scare price action, you know, potentially anticipating for some intervention. So this is about a 540 pip drop here. And as soon as Sunday night opened, we continued lower here. So maybe we get a bounce, maybe we don't. We put some moving averages here on the chart. We're below the 50. We're a good ways away from the 200-day. If this thing continues to drop further, right, maybe the Bank of Japan can get a good bang for their buck now that, you know, the yen's somewhat stronger here. If you get some kind of intervention, I'm probably looking at this, you know, 200-day moving average. This is what I'm looking at. This right here. So it could be good for the Bank of Japan to go ahead and intervene, you know, sometime soon. You know, they already have a strong yen. It's not going to be a worthless intervention, and maybe they can get the opportunity to bring dollar yen up into the 150 handle, and then from there they can kind of keep price contained within this range that we've been in a very long time, right? Some people are calling for the 140 handle. That's actually pretty possible. I remember one of my best trades was after the April 2nd sell off here. This was April 2nd, right around here. Where you at? April 2nd, July. It was somewhere over here. Basically, we brought. Oh, it's gonna be. Right here in this area here. Price got into this level, which is similar to where this 200-day moving average lines up, right? So price was essentially flirting around with the 150, 149, 148 handle here. And then the big catalyst was the reciprocal tariffs, the 50%, and that really shot dollar yen lower to that 140 handle. And then I picked it up back here. So maybe what I'm trying to get at here is maybe we can go ahead and start flirting within this range, right? Seems like a far away, but whenever you get that Bank of Japan intervention, which was the last time was in 2024, we made our way down here, right? This is a 2,000 pip drop. So it wouldn't be unreasonable to think that and to potentially play that idea. I wouldn't go short it, but I would look for, you know, opportunities to pick it up. So maybe my first step could be at this level, this 150 handle, right? Maybe get a quick bounce off of here. Or if I get stopped out at this level, then I can play it all the way down to that 140 handle. Ultimately, I remember I had a conversation with Marco last year, and that was one of my trades that I played. It was basically a taco trade, really. A lot of tariff headlines were coming up. Then there was some talks about countries coming to the table to actually, you know, make a deal. And then the first one was India, and after that we got a bounce higher, and then we traded higher, and then I ultimately got out right here. So that's kind of what I'm looking at. Hey, Marco.
Hello. I didn't see that I was in the stream, so I was just browsing on my on my PC. But yeah, good to join you. So, what have you been up to? Big news on the yen impacting pretty much all of the markets. So, what's your take on that?
Yeah, this is a good time if the Bank of Japan wants to intervene, they can intervene. It's they can continue the follow through. Last time we had an intervention, we made ourselves down to this 140 handle. I was thinking though that maybe the first line of defense, if the Bank of Japan does intervene for bulls to take a seat, would be this 150 handle. It lines up with the 200-day moving average. But ultimately, we could find ourselves in 2026 playing around in this area here, this 140 handle, especially too if you continue to see these tensions don't go away, whatever, and Swiss, and not just Swiss, but like the yen also catches a bit as far as for safe haven status. You can definitely see that the dollar yen can go ahead and find its way down to the 140s if you have intervention and if you have that safe haven demand for the yen. It's definitely possible.
Yeah, I read somewhere that sometimes the BOJ and the Fed work together. So apparently the Fed requested the rate checks that happened, but maybe it was on the behalf of the BOJ. So possibly even a small intervention actually happened. I mean, no one really knows what happened on UJ, but this is quite a huge move. It kind of looks like an already intervention that happened. So what I was expecting, go ahead. Sorry.
No, I mean, I agree with you 100%. Like if I'm referencing literally what happened in 2024, look at these three candles right here. It looks almost identical. I mean, look at that. This one, this one, this one.
Let's just bring back your screen. Just a second. Yeah. Okay.
If you go ahead and look at these candles here, this one, this one, this one, and the steep drop, then you have this one, this one, this one, and the steep drop. Let me remove this. But these two right here look pretty similar, these two environments. So yeah, someone said in the chat, it is definitely probable that the Bank of Japan can intervene with the dollar already getting some weakness, because like we were discussing earlier last week, you don't want the Bank of Japan to intervene with a strong dollar and then the intervention becomes worthless and they just wasted that, right? So this is definitely a perfect scenario if I were them to intervene, but you just don't know if it's going to happen or not. But there's a lot of things already in favor that are bringing the dollar down.
Yeah, I read about the possible sort of scenarios. First scenario was that on the open that happened a couple of hours ago, there's going to be nothing. Second scenario was that the BOJ is going to hammer the price even more. And the third scenario is that the BOJ will wait for kind of the end of Monday, so the New York session on Monday, basically today, to hammer the price even more. So I would say there's been some selling, absolutely. Gap lower, selling happening. And overall, the move has already been, let me try to measure it from the start, around 3%. That's usually right around the number where the initial intervention happens. So if you do some backtesting, you'll notice that the initial reaction from an intervention on UJ is around 3 to 4%. So that's basically what we're getting right here. And I mean, it's impacting all of the markets, Aussie dollar, euro dollar, pound dollar. Like the dollar is losing value across the map. And this thing is not helping. Usually, like if there's an intervention on UJ, the dollar weakens on all fronts, while the yen should catch a bid on all fronts as well. So I heard you like the Aussie dollar. I absolutely like the Aussie dollar. Should have bought at the end of Friday. Now I think it's a bit too late. So my main game plan on the Aussie dollar was to wait for the CPI or to position myself long right before the CPI that's coming up on Wednesday at 1:30 my time. So I'm expecting a hot print. I'm expecting possibly 1% out of the forecast, that's 0.1%. And I'm expecting for the RBA to do a rate hike, which would be, of course, bullish for the Aussie. But unfortunately, price is kind of flying away without me. I am not super happy to buy at this level, and I can see the gap. Usually, the gaps get closed pretty quickly. So what's your take on that? What is the level that you're looking at?
Yeah, I was hoping so. You bring up a good point. So I still want to continue to be patient, even though it did me dirty last time, where I wanted to be patient and wait for the pullback here. But I want to be patient for some sort of pullback. I don't want to just buy the high. However, as we've seen in recent price action, it is very possible and very probable that this thing just continues without us here. But ultimately, I put the fib from here from low to high, a retracement of some sort. If I can find my way down at that 61.8% retracement, which is like that recent resistance that I was looking at, maybe that becomes support. That'll be pretty good. The thing is, like you mentioned, and I forgot about that, but the Aussie CPI, if it comes in hot, it's definitely gonna just propel this thing even higher, and just forget about any pullback. You're gonna, it's just gonna continue. But that's the thing. I was gonna ask you, are you the type to buy at the highs, and like what's your risk management looking like at that? If you were to proceed with that, or do you wait for the pullback?
So I was looking at this exact possible trade when the market opened. So I think it was like 12 hours ago or more. But I saw the gap and I wasn't super happy to get in. I think it was right at this level, sort of at the open. So I would have been happy to actually enter on late Friday, but I didn't do it. Where the price would still be overextended, but now I just don't think getting in at this level is the right thing to do for me. If the gap fills, or I can get in near the gap fill, that would be a bit better. Maybe I'm being a bit too picky, but I just think that if I get in at this level, what's my reward to risk? What high can I target? And I think there's a pretty significant area of resistance right now with this swing high, which is again not ideal. So where would I put my stop loss? Those are the scenarios that I'm running in my head basically. But I do believe we're gonna go higher. I do believe the CPI comes in hot. I do believe RBA hikes. So I think current probability is around 60 to 65% for a hike. But once the CPI comes in hot, we should be at 90 to maybe even 95% for a hike. And that should then get priced in by the Aussie dollar going higher. So I'm still kind of on the ice. A new position that I have is on the Nikkei, where I bought the Nikkei.
Oh, awesome.
Yeah, that's my new position. And unfortunately, the dollar Swiss got crushed, but we can talk about that a bit later.
Yeah.
So as far as the Nikkei goes, also there's a gap. Also, what I know, a gap gets filled pretty quickly, and there's a general uptrend on the daily chart. The 20 MA is being perfectly respected. And if we go to the edge finder and we go to the Nikkei, I think it's one of the most bullish readings on it. So, and also another confluence that I may add is if you look at the S&P, we can actually compare it right now. So if for those of you that are watching the stream, if you click the plus button, you add the S&P on the same percentage scale, and then your beginning point goes from January 2025. Look at the difference in percentage. Let me just do it like this from January. Look at the difference in percentage of the S&P and the Nikkei. So S&P up 17.16%, Nikkei up 33.78%. So absolute outperformance of the Nikkei, which has been a bit of a theme that the capital is floating from the US into some other markets, into Japan, maybe Europe, emerging markets, silver, gold especially. So that's another game plan here where Nikkei just looks better. S&P looks to have slowed down a bit while the Nikkei keeps on trucking and keeps on respecting that 20 MA. So that's actually my question for you. Would you consider sort of switching to the Nikkei, maybe looking at entries on the Nikkei if the Nikkei decides to continue going up while the S&P continues stagnating? I know a lot of people, me included, are afraid to even touch the Nikkei because the S&P has been so good and the Nasdaq has been so good in the last few years.
You're correct on that. Like the Nasdaq and the S&P, they have been so good, but they've been so dangerously good. And it feels like we're like a couple things away from all of this falling apart, right? That's just how I feel. We know that markets are super sensitive at the moment, especially equities. We have this idea that we have the upcoming government shutdown come Friday. I don't know if you heard about that in the US. I mean, if you get another blackout, data blackout, then definitely there's going to be another layer of just losing confidence in the US, right? That's a big thing. So, and you can't argue that there's a transition, a pivot into other assets now, right? It's becoming
Absolutely.
a more, I guess, widely acceptable thing, you could say. And the Nikkei, I think, is a phenomenal way to approach it. So I would be right on with you on that.
Yeah. From what I noticed is a lot of big fund managers, hedge fund managers, money managers, pension funds, they are afraid to diversify because a lot of them got fired in the past because they weren't fully in the US, as the US had massive outperformance, especially from 2008 when they had really low interest rates and they were super dovish. So we may see a bit of a narrative spin where more managers decide to diversify out of the States and into the things that I mentioned a bit earlier, which would make the S&P long-term suffer a bit. So the returns will still be pretty good, but they won't be stellar like they were in, let's say, the last 10 years. While, again, silver flying, gold is flying, Nikkei is flying, emerging markets, Peru, Brazil, they're flying if you look at their stock markets. So money is just finding some other paths and kind of ignoring the US, which is an interesting phenomenon. So the next thing I wanted to ask you, what do you think about Bitcoin?
Ooh, Bitcoin. I don't know, man. I'm not like a humongous Bitcoin person. I've always had this level though. Like if I always put myself in the position, like if I were to ever buy Bitcoin or like start trading it or whatever, short term, I always like the 70,000 level. It looks good technically, right? Before, if you bring this down maybe just a bit here, make it wider. This was resistance, resistance, resistance. You broke out, support. So if we ever get to the 70,000 level, then I would be a buyer of Bitcoin. If you do get the Bank of Japan to continue raising the rates and maybe some unwinding some of these leverage trades, then perhaps Bitcoin does find its way back lower here. But on the topic of the Nikkei and the it being more attractive to fund managers and everything like that, let's look at the Edgefinder's real yield heat map, or it's now called the Eco Strength Index. We know that longer term money flows into the higher yielding assets. And the yen, along with the Swiss, is one of those pairs that is just, has a negative real yield, right?
Yeah.
Look at the yen here making its way up. You can see the change here, 1.15% on the right. I would say if you start getting the yen getting a real yield that's just not zero but somewhat positive, then it's worth having your basically your investments there. It's safer, right? Money's going to gradually go into that asset and also into the Nikkei. So I think longer term, those foreign assets are going to be the benefactors of what's currently, a lot of losing confidence in the US. I think it's no good right now for the US.
Yeah. I mean, it happened in the past as well. People were calling sell America and diversifying, but it didn't really stick. This time, it may be different. That's what we always say, but this time may actually be different because from the chart you showed, Japan is really going from those negative rates to maybe even break even. It's just the question is, will they actually commit to being hawkish and to continuing to raise those rates? But I mean, the PM is super dovish, which should help the Nikkei. Whatever the BOJ does, if the PM remains dovish, it should be at least a little bit bullish for the Japanese stock market. So as far as Bitcoin goes, just wanted to touch on Bitcoin. By the way, I do have another challenge to give away. So in the comment section, you will find the form for the giveaway. So go to the link, fill out the form, and then you will enter the giveaway. I'll put your name into a wheel, and then we will pick randomly the winner of the giveaway. So go to the link, fill it out. Now on Bitcoin definitely looks pretty bad in my opinion. So we have been below 100K for quite a while now. It's a key level, broken a key level of support, broken a key trend line as well. In my opinion, we have entered the crypto winter. So if Bitcoin cannot recover, and we tried to recover on the 13th of Jan, but we couldn't do it, if Bitcoin cannot commit and go above 100K, I think more downside is likely. And I don't really see the case for Bitcoin at the moment. I mean, it used to be the case of, let's say, kind of Bitcoin was supposed to be something that the big banks, the governments can't touch. Like it's a decentralized asset. But now all of the big banks, all of the money managers, BlackRock, they're all invested into Bitcoin. So Bitcoin is no longer such a cool asset to own. It's no longer this sort of niche currency that's in the shadows. It's pretty well known, and we'll definitely lack narratives. So that's what's the problem with Bitcoin. I think the question is now, what is the use of Bitcoin? Because this cool new currency that's in the shadows is no longer the case. It's pretty much out there, and everyone is invested into it. So after Bitcoin, shall we talk about dollar Swiss?
Oh yeah. One thing I have, right? I'm kind of preparing for what could be worst case scenario. And I stole this idea from Ivan just now. But you look
Okay.
left here, this level. You know, once we get up here, this is where the Swiss National Bank starts to intervene. And before, when we were at this level of support, it looked pretty far, but now it doesn't look so far away. So maybe if you do get that extreme dollar bearishness, you know, the Bank of Japan intervenes, and then you just get this outflow in the US, then you can get a spike down up into here, which is, if we measure this move, 500 pips. It's actually pretty far, I guess. But then you get this snap back up here, and then you get a somewhat of a recovery here. So I have an alert right around here. Remember, we talked about the Swiss franc does not like a super strong Swiss. It hurts their exports. You know, if you're a Swiss resident and you have investments in the US, for example, it's eaten alive. Yada yada yada. So that's kind of what I'm preparing for the Swiss. In the short term, if we get a pullback back into this level of what was support here, that would be pretty good. Whenever we broke this level of support last time, this bigger level, we flushed down below, we retraced back, and then we just continued lower. So I'm looking for something similar here in the lower time frames. So if I go down to the 4 hour, for example, so we broke this level. If we can somehow find our way back up into this level here, then I would be open to taking a short stab at it, and then ultimately playing for some more safe haven. I mean, the safe haven play seems to be the more reasonable one. There's just a lot of things happening that are scaring investors longer term. So shorting it and then maybe targeting somewhere here looking left, then we can go ahead and maybe take profits if I get the opportunity to short. But that's kind of what I'm looking for in the short term. And then if you get that pullback in the dollar, then maybe you can get a pullback into the Aussie dollar long, right? That's just a hypothetical. But we have to remember we have that CPI coming up that could really just continue that going. But we'll see.
Yeah.
At this point, though, honestly, maybe like, I don't know, if we get even a small relative pullback, I may even participate going short. Like if we can find ourselves maybe back up to like here or something and just widen my stop to stomach a higher pullback, then I would be open to participating.
Interesting. So you basically flipped from a bull to a bear.
I'm flipping, man, but it's a tricky thing to navigate, really, because as we said in the chat yesterday, like, long term though, the fundamentals for the dollar is not bad. It's just a lot of these headlines that are really pressuring. So like the taco trade is a good thing to associate with this, but like if that just gets redacted, then the repricing happens really fast in these things, and then you just get a snap back higher. So that's kind of like the thing I'm struggling with at the moment.
Yeah, unfortunately, taco didn't work this time, at least not on the dollar, because the dollar just kept on selling off. It worked kind of on the stock market.
It did, yeah.
If we look at the S&P, yeah, S&P doing pretty well. So this was the weekend this was the drop. This was the cancellation of tariffs, and now we're back pretty close to the all-time highs. I think Nasdaq did something similar. Yes, pretty much the DAX also. So the DAX did something similar as well. But the dollar just keeps on going lower, and the taco didn't happen. So what do you think about that? Because usually you would expect the dollar to rebound as well after the big sell-off. So what's your take?
Yeah, I think fundamentally, like, there's just a lot of things against the dollar, and more to come to potentially. If you get that government shutdown, and we're in another blackout period, I mean, it's gonna hurt the dollar a lot, right? But I mean, that's what the president wants. So
Yeah,
I think it's very probable. I think it's very probable that we get a weaker dollar. Especially too, like if I'm just looking at this chart here on a weekly. If you get this level breaks, right? I'm just looking like random level here. If you get this level to pop, then right close to it is that famous number that we all know, which is 95.
95.
So if you get this break here, continued headwinds for the dollar, another blackout period, government shutdown, tariff threats, all this good stuff, then
Yeah.
absolutely 95 becomes a more of a reality than a myth.
Yeah, for those of you that are in the A1 Discord, you would know about the DXY to 95 prophecy from our member Ballout. So if the DXY actually reaches 95, I'll stop trading fundamentals. I'll drop the edge finder and I'll do Elliott waves. So I'll be an Elliott wave trader if it drops to 95. So we shall see. We shall see what happens.
Not just ball out though. There's we have A1 James as well.
I think we do.
A1 James is on the boat as well. So if you know them two together, if they go ahead and pile into that, I'll put some horsepower behind that, and we'll go 95.
Yeah, the idea is absolutely growing. But I mean, dollar is sliding, so it's actually becoming kind of likely to hit 95. We're pretty close, getting closer actually. So interesting development. Absolutely.
Yeah, I would say that 96 floor is something to watch out for anyone. For two things: a bounce or a break, a straight up break. That would be kind of what I'm looking at. That's like the next level, and it seems like we're gonna get there. I mean, just look at the price action. We're pretty much there.
Basically, yep. So we shall see what happens. I mean, the shutdown is pretty likely. And the last time the shutdown happened, do you remember the date? I would have to grab it from the internet. I don't remember the date, but it wasn't super bullish on the dollar, wasn't it?
It was not bullish, no. Definitely
yeah,
not.
it was kind of bearish. So we shall see what happens with that. So gold exploding higher, silver exploding higher as well. Do you have anything that you added to your watch list?
Besides those pullbacks, no. Pretty the same here. But I mean, look at these. I mean, this is just another layer of why the dollar is likely to just continue in this short-term direction. Central banks are easing. Safe havens are catching bids left and right. I mean, these things are running. Look at that. Silver 111 already. And it was just 100 2 days ago. So
this is crazy.
On Friday. So yeah.
Yeah, this is pretty crazy. Looks like my gold buy setup won't happen. I mean, we have just exploded higher. No pullbacks, absolutely zero pullbacks. Which in the past would mean that we're close to the top, but in this current market environment, it just means we continue going higher. So maybe we, in like 1 to 2 years, we will actually be all piling up on the all-time highs and not looking for pullbacks. Maybe that's going to be the new theory in trading. So I mean, the markets change. We shall see.
We should see, man. But I will let you go do your giveaway here. I would like to say for anyone here before I go ahead and give the stage to Marco here, definitely check out the Edge Finder, guys. I'm going to pull it up here. This is a brand new thing that they just added, which is really nice. I'm going to make a video on this as well. This is basically the eco surprising meter. So for your short-term traders out there, this is going to be fantastic for you. It's already been fantastic, but now as we get more data in, you're going to actually see the relative strength change here over time. And then you can reference that with price action. So just to kind of say, there's always updates on the Edge Finder. This guy, Nick, man, he's crazy. He never stops, which is a good thing for you. It's a one-time payment. You get it. And for life, you get all the updates and everything. And also join the Telegram channel as well. Completely free value every day. I put two chart markups here, and also a quiz to kind of keep you guys sharp. So you are always ahead of the curve on fundamentals. But with that, Marco, I will let you go, my friend. Have a great rest of your day. And we'll talk soon, okay?
Thank you. Talk soon. See you.
All right, man. I'm going to go play in the snow, like someone said. Yes.
Yeah, sure.
All right.
See you, Alan. Goodbye.
See ya.
So let's continue with the solo segment. Hopefully Alan is warm, because I saw on his monitor it's like 2 degrees Fahrenheit where he's at. So that's extremely cold. But yeah, I do have the link for the form. I'm going to put it in again. Watch for the comment. So in the comment section, there's a form to get a free DNA funded challenge. Let me see what is the size of this one, because I think that was the question. So this is a 25K one-phase account. Okay, 25K one-phase account. This is a bigger one. Usually it's 10K. Now it's a 25K. So I highly recommend you guys fill out the form. I'm gonna copy all of your names, put it in the wheel, and then we're gonna do a random giveaway. After the stream, I'll send you an email with the code. If you're a winner after the stream, I'll send you a code, and you're gonna get a free challenge. Let me see if everything is up to date with my list. Yes, I have your emails, I have your names, everything is good. Okay, awesome. And don't try to enter twice, because we have someone checking the submissions in the background, so it's not going to work. 1 entry per person, and that's going to work. So if you do want to get funded with DNA, we do have a discount code as well, which is going to be A1 Live. So A1 Live gets you 25% off any DNA funded challenge. Okay. My personal challenge, I breached the max drawdown, unfortunately, so time for a new one. But until that happens, this is the website, basically DNA funded. The account that I recommend is 2-phase, 25K, 50K, 100K. That's kind of what I usually go with. It has 10% target for phase 1, 5% target for phase 2, 6% max daily loss, 10% max total loss, and it has a fixed drawdown. It's not a trailing drawdown, it's a fixed drawdown, which makes things a bit easier. And again, this price, you get 25% off with the code A1 Live. Now, let's continue with the program. So the Nikkei, I'm in a trade. This was a signal in the A1 trading Discord. The reasons I took it were, I basically explained them with Alan. So Edge Finder is bullish, respecting the 20 MA, uptrend on the daily chart. Fundamentals look good. The administration in Japan is dovish. There has been an outperformance of the Nikkei against the S&P. So the S&P made 15 to 17%. Nikkei is up 30, 35%. Money may be flowing out of the US into some other markets, emerging markets, Peru, Brazil, Japan. Okay, Japan is not an emerging market, but it's sort of where the money is going. Will that continue? We don't know. But for me, I'm pretty happy to place a bet on the Japanese stock market. UJ, quick glance on UJ. Continuing the drop, although it doesn't look like an intervention anymore. So the BOJ is very cryptic. You never know exactly what they're doing. You never know. You never know what is going on the BOJ. So basically, this move was massive. It was just a meltdown in one candle on Friday at 6 p.m. my time. The first attempt was here. That is when the Fed did a rate check. But then we had this move as well. As I mentioned, the BOJ, Bank of Japan, and the Fed, Central Bank of the United States, they do sometimes work together. And the BOJ does the actual or the Fed does the actual intervention, but it is requested by the BOJ, right? So the Fed does the dirty work, but the BOJ is behind it. We may get more information a bit later if I jump on to the breaking news. Maybe there's some more clarity. No, not really. The last thing on the end was the suspected yen intervention, and that didn't stick. So this move did not stick. It was here. This one, though, definitely dropped. One more thing, the interventions are usually done when there is low liquidity, when there is basically just very little movement in the markets, because they get the best move for their buck. It is the cheapest to do an intervention when the liquidity is the lowest. So end of Friday, beginning of Monday, or holiday in the US, or when there is news from the US, or when there is sort of a interest rate decision in the US, right? Maybe a dovish decision, which makes the dollar lose value. So they don't just do it on a random Tuesday or a random Thursday when the liquidity is plentiful. They usually do it when the liquidity is low. Pound Aussie, still looking to sell it. Still looking to sell the Pound Aussie, but I'm looking for a pullback to the 20 MA. So that's on the radar. I have an alert set. If we hit my level, great. If we don't hit the level, that's too bad. But Edge Finder, what do we have here? GB, PAUD. Bearish reading on the Edge Finder, that's good. Aussie dollar, I absolutely love the Aussie dollar in fundamental terms, but as far as technical analysis goes, it might have ran away without me. So the Aussie dollar might have just exploded higher. And do I hunt the price? Do I get in at the all-time highs? Not exactly sure. As I mentioned, I would have been happy to enter on a Friday. So I would have been happy to buy on the late Friday, but I didn't do it. I was a bit too slow to react. To be honest, I clocked out at, I think, 6 p.m. I was working on a YouTube project, you can say, for my social media. So I didn't even watch the markets. At the moment, just price looks too extended. There's a gap. Gaps usually get filled pretty quickly. So if I do decide to take a position, of course, you will get an update in the A1 Trading Discord. Link is in the description of the stream if you want to join that. And there's a discount code as well. Let me not forget. So with the code Marco, you can get, I think it's 40 or 45% off this month on the Discord and on the Edge Finder as well. So there's a big discount with the code Marco. I wanted to check out Euro Yen. Euro Yen flying lower, yes, broke out of a key trend line, possible trend change. So EJ looks pretty bearish. Again, the yen seems to be catching a bid all over the place. And that is visible on the JXY as well. JXY measures the strength of the yen relative to all of the other assets. So JXY looks super bullish. Again, DXY super bearish, JXY super bullish, which just means the intervention has an impact on all of the markets. So everything that's connected with the dollar, you're going to feel it. Everything that's connected with the yen, you're going to feel it as well. So Aussie dollar recovered, gold exploding higher. I just don't see an entry here. I mean, I would love to be in. I would love to take a buy setup, but I can't chase the highs. It's not in my plan. Maybe this is, or I'm sure this is not the right time to get in, so I'm just not gonna get in. Last plan that I had was getting in on this support level, getting in on a bit of a pullback around the 20 MA, and that unfortunately did not happen. But I'm keeping it on the watch list just in case we start to get a pullback and the 20 MA starts catching up to the price. I just think if we do finally get a pullback, it's gonna be a big one. So it could be a violent one to the downside. So that's a bit of a problem. Now, time for the comments. Okay. So time for the comments. Let's see. What do we have? I've been thinking since Trump has Venezuela, he doesn't need Canadian oil, and it's affecting their currency. We have some dollar CAD stuff. Do we? Yeah. Okay, but I mean, we have dollar weakness, CAD strength. Interesting development, though. If we go to the economic data and we go to, or is it macro scanners heat map Canada, actually getting a bullish reading, right? Summary, New Zealand dollar right now the most bullish, Swiss the weakest, dollar bullish, pound bullish. Pretty much most of the currencies seem to be getting a bullish reading. And from the major ones, the Swiss looks really bad. So I thought it was pretty interesting to see Alan flip from a bull to a bear. But I can see his reasoning for that. Although I personally am not looking to, so I got taken out of this position. Price just flew through my stop loss. Part of the game, part of probabilities. My win rate is around 45 to 50%. So again, half of the trades that I take will be a loss. And if you look at most of the successful traders in the space, most of them have 50 to maybe 53, 54% win rate. Kind of the top percentage would be 54, 55. Maybe if you're really good, it's gonna be 60%. If you work at like SMB Capital, you may get a 60% win rate. So the win rate is not the most important part. What is important is the reward to risk. So when you win, let's say twice as much than when you lose. You need to keep your winners much bigger than your losses. That's the key. That's how you stay in the game. That's how you actually make percentage as well. Bitcoin lower. I'm bearish as well. I'm with you, Sluggy. Very, very thick, high viscosity. It takes too much to get out. Okay, talking about oil, BTC to 50K. I mean, BTC to 50K, it could happen. With crypto winters, we saw some pretty violent moves. I think 70 is absolutely achievable. So we could hit 70, no problem. 50 is a bit aggressive. Yeah, I would say 70 pretty likely, but again, I may be wrong. Look at the last crypto winter. So look at this one. Look at the drawdown from this winter. Look at this one. Look at the absolute carnage that happened after 2021. It's going to happen again. If you measure this move, if we do some fibs, although I rarely use fibs, 618 is at 58 level, 58K. 0.5 is at 70K, right around 70. So that is absolutely achievable. It's crypto, so things can be pretty violent. Marco giving away challenges like it's cookies. I call them bribes to watch him. Okay, time for the wheel. So let's spin the wheel. I almost forgot about it. But we do have a lot of submissions. So let me just copy the names for the submissions. Okay, let's copy. Let me then go to my wheel of names. This is it. Let's try. By the way, this is a 25K one phase account. And the winner is Rick or Mike? It's going to be Rick. So So Rick, congratulations on the free challenge. I have your information. Let me just check. So let me check for Rick. Rick. Yep, I have it. So I have your email. After my segment, I'll send you an email with the code and just use it on the website. All of the info will be in the email. Congratulations. I do believe I have a couple more challenges to give away, so make sure you guys tune into my segments. I will be streaming for the whole week. You can find my schedule in the A1 live stream schedule. So right here, see? Yeah, pretty much for the whole week. And those are the times when you can catch me. Okay, let's see the latest comments. Hello, Joshua. Did you change your name? I think you did. You're now Markets Aurelius. ICT, BTC to 50K. ICT has 90% accuracy. Discount code for the signal channel. Discount code for the signal channel is Marco. So there's a link to the A1 trading Discord in the description. In the Discord, I personally give my trading signals, and you can use the code Marco to get, I think it's 40% off for this month. You have also Nick, Iwind, Chris Pulver, Alan, and you have me. Okay, let's see. I don't get, why are you fighting 95 when we are like 1% away? You could have rode it all the way down from 110. Okay, let's see. If you have any chart requests, I still have 3 more minutes to my segment, so put it in the comment section, and we're gonna do some charts. As far as my personal take on the markets, I mean, we went through the watch list. Silver, I don't want to touch. Jeez, every time I open up silver, it looks absolutely crazy. So congrats to anyone that's still in silver. This is an awesome move. Silver, I think it even beat Bitcoin by the return amount. Maybe not the all-time number for Bitcoin, but definitely in the last 2, 3, 4 years, silver is the absolute meme coin of the financial world. So silver, I don't want to touch. Platinum continuing higher. Copper still a bit flat in this area. The DAX starting to recover. So fortunately, the DAX has started to recover a bit, although I'm not super interested to buy at this level. I also think the Edge Finder is not printing a bullish reading. Let me see. DAX. Neutral reading at the moment on the Edge Finder. So the DAX is not really something I wanna get in at the moment. This pullback was violent. So this was the taco trade. This was Trump going crazy with the 10% tariffs on Europe, which of course he went back and said that he's not going to do any tariffs. So the markets quickly recovered. But it's not my favorite at the moment. My favorite is the Nikkei. I also did mention the sort of outperformance of other markets compared to the US. Let's see the DAX. So how has the DAX been doing in 2025? What has been the return on the DAX? I don't think it's going to be a huge return. So 25, we have the 2nd of Jan. Well, actually, it looks like, let's see, Jan. It looks like the DAX beat the S&P. So the S&P made around, I think, 15, 16% in 25. The DAX is up 22%. So outperformance, that's pretty much the evidence right there. Money is going from the US into some other markets. And we have started to see some outperformance. In the past, of course, US just was the massive winner. The US just outperformed everything. Things may finally be changing a bit. Euro dollar, Dow, UJ. Okay, let's see. Let's pick the last one for today. Euro dollar. Let's do EU because they haven't touched it at all. EU rocketing higher, massive bullish moves. That is based on the dollar weakness. We are approaching the top of the range. So we do have this flat range right here. This is now a pretty significant level of resistance. Edge Finder, what do we have? Euro dollar. Bullish reading, but is it really a huge score? No. To be honest, euro dollar is not something that's super interesting, in my opinion. The euro is not such a strong currency. If you do want to play something with the dollar, I would stick to AU. AU right now, Aussie super strong. Dollar definitely has some weakness, but AU seems pretty good. Or maybe what you can do is, of course, NZD/USD is a good play. NZD/USD. Again, super bullish. So I prefer those currency pairs if you want to do something. EU just seems to be pretty close to resistance level. I think we could retrace at this level, and I don't really want to go long. So that's about it. Thank you very much for watching. You can catch me tomorrow. I'll be streaming for the whole week. My schedule is on A1, on the A1 website. Use the code A1Live to get 25% off any DNA funded challenge. Good luck in the markets, and I will see you in the A1 Discord and in the live streams. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.